All right, you know where there's not a lot of fear and anxiety? At the CNBC CEO Council event on the mean streets of Palm Beach Gardens, Florida, where Morgan Brennan is. Morgan.
Yeah, I have the best live shot of the day, Brian. Thank you. Joining me now here from the CNBC CEO Council for an exclusive interview, Jim Crane. He is chairman of Crane Worldwide Logistics, which is involved in a whole host of industries: autos, energy, hospitality, life sciences, more. He is also the owner of the Houston Astros and a serial entrepreneur. It's great to have you here on set. Welcome.
Thank you for having us.
You're in the freight business. How's the freight business right now?
Freight business has been pretty good this year. It's driven a lot by high tech. A lot of the high tech folks building data centers, servers, racks, all the equipment associated with that's flying around all over the world. The rest of the industry's, a little down, not much, a point or two, but everybody's adapted to the tariffs and all the things they needed to do to adjust to that, and I think things are smoothing out.
Yeah, and I was just going to ask about the impact of all the volatility we have seen this year with trade and tariffs and what that's meant.
Well, it was just the unknown. And a lot of times we weren't sure. We talked about things the government was going to do, and then some of it changed. And once they locked in, you got to get all those adjustments made for people that are buying the goods and how that affect their costs. And quite frankly, it will go down to the consumer at some point. There's some things they can do. They can put it in a bonded warehouse and not pay the tariff until they take it out. They can send stuff over and bring it back and get some recovery that way. But for the most part, if it goes up, it's going to hit the bottom line somewhere.
I mean, you're on the front lines of trade flows. Have you seen a shift in terms of where things are going and coming?
Asia's still heavy on the tech side, but the general industries are good. The oil and gas is kind of steady. Pharmaceuticals is still good. Retail's held its own, but nobody's blowing the doors off right now.
On the consumer side, we're heading into holiday season. There's been a lot of talk about a pull forward and a buildup in inventories and maybe a replenishment after the new year. What are your thoughts?
Well, it always gets pulled forward. This year was a little difficult. You may see some more late stuff coming in now. If it's not here by now, you're probably not going to see it on the shelves. So most of it's been done, and we did see a lot of activity, a huge September across the board for most people in our business.
How do you think this sets us up for 2026?
26, it's a question mark. The market's a little rocky. I think if things settle down a little bit, I'm always positive. I think there's still a lot of big plans. The tech thing's just getting started, the data centers and all of the money that's being raised to go in there. So I think we've got a few bright years with that big push behind us, but after that, you don't know. And you don't know when that's going to settle down either.
I want to shift gears here because you are the owner of the Houston Astros, obviously a hugely successful baseball team and a franchise that you've rebuilt. Economics around baseball can be challenging, or so I've heard. Just want to get a little bit of the insights from you in terms of lessons learned and how you've been able to rebuild this franchise.
Well, you really got to try to keep your revenue, keep your fans happy. That's winning. This year we didn't make the playoffs for the first time in 8 years, but we had a good team, had some injuries, so it doesn't always go your way. I think baseball's in good shape. You saw a great World Series. There's more fans, more content, and I think there's plans in the future to smooth out some of those issues. So I'm very positive, that the business will continue to grow, and, we need to catch up with football.
In terms of catching up with football, what does that mean for valuations for baseball?
Well, if we can get their valuations, we'll be all right. But I tell people, valuations are great, but it really is not money in the bank. So you really can't spend a valuation unless you sell the team. And so we're not interested in doing that. Yeah,
a lot of focus on labor negotiations and possibility of a salary cap.
All that's been talked. I think that won't hit the table until the end of this year. But everybody's planning. I'm sure both sides are working hard. I just came from an owners meeting, and everything was positive.
I mean, we're talking about here at this council event, we're talking about the business of sports. We're talking about the experience economy. You have a key vantage point, both as a sports team owner on that side and then from the freight side in terms of the goods that are moving around the world as well. What are you seeing? And I guess, is it changing?
Well, I think this was a pretty good year. I think, all of it connects together. If people have jobs and the economy's good, they go to more sporting events, spend more money at the ballpark, buy an extra jersey. So we're kind of the last part of it there. We see it on the front end when the cargo's moving and things are accelerating and, people are ordering more and the inventories are high. So you can kind of back all the way down to the consumer, and that's who pays the bills. And, if they've got good jobs and the economy's rolling, like I think it will continue to do, I think we're in good shape.
Inflation stays sticky here, or do you think consumer continues to buck that trend as wages grow?
Well, I think the interest rates going down a little bit will help, but the prices are going up on everything. It's pretty amazing, the cost of building and the cost of even moving the cargo and that sort of thing has continued to go up. So, we got to get that under control, and I think it's not out of line yet, but if we keep it there, we'll be in good shape next year.
Jim Crane, appreciate the time and the insights.
Thank you very much for having me.